This is the bearish count for the S&P 500. So we've got wave A down here from coming all the way down from all-time highs, and the A wave here, and A, B, C for the B wave, and 5 waves up here for this. So 1, 2, 1, 2, 3, 4, 5, and we're in wave 3. Well, done wave 3, we're in wave 4. We need to talk about that. And then we have wave 5 here. So because the extension's in wave 3 here, then wave 1 and wave 5 can have some sort of relationship to each other in terms of time and price, so to speak. So that's really sort of where we are for the bearish count. Now, obviously, we can turn this into the bullish count, but there's no need to do that today. But the bullish count would obviously have 5 waves to the upside here. When these 5 waves are finished, in both cases, they'll have, one will come down at this point, and it's never in a straight line, of course, but the other one would have an ABC correction and then push up at that point. But normally within using the trading levels, which would be quite handy, is that if it's going to be a bullish pattern to the upside, well, we're going to see something sort of like this, really, I guess, across this level. It may come down to 1.5 here. That's kind of common, and then start to build again back up off that point. That would be the bullish case, and that's what we can look for at that point. So we get this quite often. So when we get that 5 waves up here, when this, in both cases, we're going to get an ABC back here. Do you know what I mean? One will just continue to move back, and so on. So it's going to take a little while to decipher which is which at that point. Sometimes we can get leads from other markets. Some markets are in tune for a little while anyway, and then they move out of being tuned in, and we might be able to pick something up in the US dollar or some other market, but anyway, they're the two scenarios. So we're still in the bullish trend to the upside. That's the main thing here. Now, there is a slight possibility that, when you think about it, we actually have 3 waves up here. So it's possible that this could be an A and a B and a C wave here. And because we've got this as a C wave coming here, we could put the B wave over here and the C wave here and have the B wave here. And this is down for 1 here and ABC back for 2 here. And then we just collapse from this point. I don't think it's the case, but, I think it's my job to point things out that are possible, especially if folks are thinking that they're going long at this point. It'll just make folks think twice about how much risk they take on and where they enter those trades and so on. So yeah, that's kind of it all in a nutshell. The only other thing that we need to talk about is this particular wave 4 here, because wave fours tend to pull back to the wave 4 1 lesser degree, or 38.2%. So technically we're still in the earnings phase as well. So the stocks that I follow on my videos are mainly tech stocks. They're showing their earnings well. Aftermarket today, I think, is Microsoft, and then you've got, I think, end phase, I think, could be the same as well. And then you got, from the 24th, 25th, and I didn't notice any on the 26th, but the 27th anyway. But anyway, all of this week, they've got some big stocks coming out. So, they can make the market a little bit volatile, especially because they don't meet expectations and so on. So it's possible for this wave 4 to drop lower here. So that's another thing. And the current move down with this here is a little bit of a guessing game, really. I can see that you could get ABCs out of it. I can see that you could safely WXY things and get yourself through it in that way and whatever. But I think at the end of the day, it's possible for it to pull back to the wave 4 of 1 lesser degree. So it's possible to have a move back in here before moving to the upside. So we need to navigate through this, and it's a bit of a rock and a hard place really, because we've got the earnings coming out. Now they could be fantastic and the market could just jump up here, and we know 100 number 1 is the strongest number in the market, and it's it didn't come down and touch it. So that means that there's orders here, it's strong at that point. We can see the stochastics has been very lazy coming down here. Do you know what I mean? So that's always a nice thing. It's given us a buy signal at the moment. Well, for us to give us a buy signal, we'd also need 5 waves here, and we like the little ABC setup to help manage the initial risk of the trade, those sort of things. I have to say, this was all quite messy coming up here, wasn't it? And now we're still getting messiness here, and I think that we will get messiness unless the earnings are actually fantastic. Then I think that we can expect more sort of choppiness to come in. I'm not quite sure. I like the angle of wave 4 here. It tells me that it doesn't want to go down. It's just sideways, and it's got support, and the fact that it didn't touch the 100. So all these sort of subtleties telling me that, yeah, there could be a low in place, but at the same time, we just still need to be sort of cautious. So we look over at the price here, and we know that, well, there's a 3 in there. So that 3, that 30 there, that would be the top of group 1 of 100. So that would be the first support area that we would tested support on that level, top of group 1 there on that 30, to establish the first long trade if you wanted to go into that. The second one would be halfway between the 100 and the 200, which would be the 50. So sitting on the 50 with the classic trading levels pattern would be the trade, would be the safe trade to the upside. Yeah, so that's sort of where we are at the moment with this. So we're looking for wave 5, that's the 50-60% retracement level, all of that sort of stuff. So if we're going to go into a big bear market, and I don't know if we are, I don't know those sorts of things, but in terms of patterns, and that's what you pay me for, is that, if it's going to be bearish, then after these 5 waves here, that's when that's going to, occur. So we can do a pretty reasonable job of counting 5 waves up here. So when we get to the top here, we won't know what's going on unless we can pick up something from another market. So that's really it in a nutshell. But let's just go in here and have a look at this from 50K, staying on the bearish count to the upside. Would be this one here. So I think we could pretty much remove the A over here and the B. That's just having that as the A, the B, and the C, and having a top here. It doesn't really look impulsive coming down here. I know it's all a little bit messy, but basically what I want to point out is the 1, the 2, the 3, the 4 here that can pull back to this blue wave 4 here. So it's quite a way here. So in this stocks video this morning, we're counting this here as the wave 3 here. We're looking at this as the A wave, and ABC for the B wave, and then 1, 2, 3, 4, and 5 down here for the C wave. So that could be it here. But the banner in the works is that we could also put this over here as an A and a B and a C for the B wave. So we look at, I'll just copy this here. All of this here is the A wave, and then as an ABC for the A wave, and then the C wave coming down here for wave 4. Now, there's stocks like Tesla that need to come down. There's others as well. You can watch the stock video for that. So that's the risk of it here. That's that wave 4 here somewhere. So, it can give us that sort of equal length. If we take that here, that's roughly the length of that. And then we put that on top of the B wave here. We'll just chuck it there for the moment. I don't know if it'll push up further. So, it can come down to 40-80, 40-70 area, group 2 here, which is the normal sort of thing here. And in a way, this would be the arrival, the reaction, the first high above the level, the A, the B, and the C here. And then we push up from that point. So, yeah, I mean, this is all a little bit tricky in here to count. There's some of it that's clear, you know. We can count 5 waves in this leg here. We can count 5 waves in here. We can count 5 waves down here. We can count 5 waves here. This is just looks, you know, it's sort of typical wave 4. And yeah, I mean, we could also look at this as wave 1 to the upside. You know, that's not an issue, but it's not going to sort of help us, you know, in that regard. And we can have that as wave 2. So I guess this here could be 1, 2, 3, 4, 5. So that B wave could be in there, but normally you have a B wave a little bit further up, but you don't want to do anything in the off session. But let's just assume let's take 2 scenarios. Let's just assume that this one goes down here from this point, right? Drops down to say down here somewhere, right? If it does that, then you can put a line across the top there. And if it does move up at that point, then we're good to go long at that point. Okay, so that means it needs to drop down below the 30 here, right? So that's dropping below the 30 is one scenario. Then it exposes that high there, which you can use to go long at that point. If in the off hours this pushes up here further, it still doesn't matter. We still need to put the B wave up here for that. But if you get a classic trading levels pattern sitting on this level here, which will look like this here with the arrival, the reaction, the first high above the level, the ABC, and a bit of a process, but eventually migrates from being resistance to tested support over here, taking that high, and then that high if you want. So that would be the arrival, the reaction here, the first high above the level, then the ABC pattern, and then up at that point. And the safe trade would be this one here. So yeah, wave 4s can get complicated. They are a bit messy. They you know, but the thing is, you know, after a correction, a trend comes next time, you know. So, and with corrections is that, you know, if you can just not be very careful and not touch them too much in their early stages. So we may be right in the middle of it here with the B wave. But if we do come down here, then that's kind of a really good thing, because then all we need to do is count 5 waves down here, you know. Can we put the B wave here? Can we look at that as 1 and ABC for 2? Maybe. These are the things we need to work out. But you can see that me doing all these different counts here is a bit of a guessing game type of thing, you know. So I try to draw a line in the sand with this. And if we look at the NASDAQ for a moment, it kind of makes it a little bit easier, actually. So with the NASDAQ here, we've also got this complicated correction here as well. And normally, you know, the wave C would drop down below wave A here. It doesn't have to, but with a norm. It has rejected this 13,000 here in 3 waves. So from this point here, this A, B, C here. But at the same, and I would expect it to make a new low below this low here, but it has made that low in 5 waves. So it is possible that it can be a low in place here. We could put this here. You know, there are stocks that can push up from this point. Just watch the stock video and you'll see that. There's some that needs to go up, some that need to come down. That's the thing. So it's the weight of the whole market, because this is obviously a bit of a moving average of those 100 stocks, this NASDAQ 100. So all I can say here is that, yes, the market can come down further. Yes, it can have a low in here. So it doesn't really matter, but all you need to do is just wait for a classic trading levels pattern to come into here. So it'll be a bit like this here, the arrival, the reaction, the first high above the level here. And then what you're looking for is some sort of smaller ABC that would come back 50, 60% of that, whatever that move is here, you know, but that would be the long trade at that point. Or the top here, if you can figure it out, you know, that top here. But you don't want to go start afresh here. You don't need these old highs here. But this is the other thing too. We are trending down. We've got lower highs here. So this low can be taken out here, and we can come down here further. You know, this could be wave 1 here. This could be wave 1 and 2 here, and then 3, 4, 5, you know, to finish this off here. So I don't know yet. I mean, it just can be counted at any, I mean, it's great that we got the 13,000 here. So support on that is bullish. Taking this low out here is bearish. But, you know, coming into group 2 here, you can do a quick trade down here if you can recognize it, but there's going to be a lot of support coming in here in this area, group 2. So really this is all normal sort of stuff. It's just, you know, group 1 above, 1, 2, 3, and group 2 below. That's the swing range for this number here. So this market is doing everything that it should be doing. It's just that we got earnings, and obviously I can see that everybody's a little bit unsure about things, and you know, it's choppy. So we just need to be extra careful at this point. And I can see that this, you know, I'm reasonably okay at counting Elliott waves, but I can see straight away that this can be counted in different ways. And even if I explained all the different ways that it can be counted, it's still not going to give us the answer of what we need at the end of the day. It's easier for me and it's simpler to say that if we get a tested support with a classic trading levels pattern on the 13,000, that will be our long trade setup. If this low is taken out, yeah, we will come down in 5 waves here, but this this 65, 72, and 80 here, as I call them, group 2, it's, you know, you just trade down to this low here. That's all you can do, because the number 8, you know, the third strongest number is going to show up there. You know, there's going to be short covering and buyers in there. So that's that really, you know. I mean, the interesting thing here is that, you know, as I pointed out before, we've got 5 waves over here, there's 5 waves, and I haven't really seen that being played out in the opposite side over here. You know, I could go 1, 2, 3, 4, 5 here, but you know, there's overlap in all of that. There's an A and a B and a C here. That's possible. But yeah, it's just complicated, whichever way you want to look at it. And it's not that much better for the other markets as well. So this particular sideways pattern that's happening here, we're seeing that in the other markets as well. So we can look at the Russell as a bearish picture. We can go wave, you know, coming down here as wave 3 here, an A and a B and a C for wave 4s back to the 38.2% retracement level. In this case, we're looking for the SP500 to move up. So, you know, well, shouldn't the Russell move up as well? You know, that sort of thing, or does it have to, or what's all that about? I mean, we could certainly make a new low here, because when you think about it here, this move here, we can look at this as an A and a B and a C wave up here, but we could also look at it as 1 and 2 and 1 and 2 here. But if this low here is breached, then that would be bearish from that point, and that's why I've got this here. It doesn't make a very nice wave 1 in here, I understand that, but if that's breached, and possibly even this one here now, if that's breached, I'll just be a bit careful about that one, because I haven't checked if we've got 5 waves here. But if that one's breached, then it's down from that point. And you know, as I said, since we arrived up here, it's been a long time, but until we get support on this number here, then we can't really be long, because if the market's going to fail, it's going to fail from being under this number, and it's as simple as that. And what, you know, when would I stop being bullish here? Well, if group 2 here, we've got group 1 above, we've got 10, 20, and 30 above, that's all group 1, and this is group 2 below here, that's the swing range for this number. So if we got a retested resistance here this time around, then that would be telling me that we're leaving this number, it's been rejected. Technically in Elliott, you would look for this low here being breached. If that gets breached, that forces this to be an A wave, a B wave, and a C wave at that point. But we don't know that yet, because this could also be wave 1 and 2 and 1 and 2 in here, you know. So we don't know that yet. You know, the other point here is the, you know, the 50-60% retracement level from the top here to the bottom here. So this is the support in here, all of that's about here somewhere. So that's the support for this market. So, you know, you don't want to go short really into support. You can, I mean, taking this one out here technically is okay. So you can do a small position here. And then, you know, my normal style, as you know, would be to, if you took a short position here, you need to protect that along the way, but the next short would come under group 2 here, being the resistance at that point, you know, because if that becomes the resistance, then we're going to come and check these lows here. So that would be the way lower at this point. And if we're going to go higher, well, we need another high above the level before we can, you know, we need this high breached, or this high if we can find it, and then we can go up from that point. But it's not there yet. Nothing is there yet for this, you know. I mean, we can look at the Dow Jones next here. I'll just go to the industrials here, just while I've got this below here. This is the industrial sector here. So this is one, you know, a bit like Apple, I guess, that has come quite high, back up to its previous highs over here. I mean, it's just, you know, it's a different thing, of course, but there some markets like Google, you know, are still bobbing along their lows, not quite on their lows, but, you know, a third of the way up. Some are halfway up and some are way up the top here. So in a way, it's hard to look at this as being the Dow Jones. I mean, this is just the industrial sector, but same to a point. You know, it looks bullish. We've got a nice A wave and a B wave here and a C wave here. Yeah, we can look at this as an A wave here. We could go an A, B, and C wave here, but it's a bit difficult with the Dow Jones. That's the top, but with this sector here, it's taken out those tops there. So it's a bit difficult, you know. Can we put wave 1 over here? Can we do those sort of things and look at this as 1, 2, 3, 4, 5 here? That's possible. And then down for 1 and back for 2 here and down again at that point. But I can say that once we got these little 5 waves here, 1, 2, 3, 4 here, if we can get a push up here, that would give us 5 waves in this little leg here, 1, 2, 3, 4, 5, and then anything above that, then we can eliminate whatever bearish counts that exist at that point. Little 5 waves, because otherwise this would be an A wave, a B wave, and a C wave here against this counter trend of this move down here. So yeah, so it's getting to the point where it can be confirmed bullish, but it's not there just yet. There's still, you know, I counted 5 waves to here, but what about if I was wrong? You know, can I put it over here? What would that look like? Can we look at that, you know, as down for 1 here? Can I put this B wave over here as an A wave here, an A and a B and a C wave over here for that? Possible. You know, so there's a few things that need to be eliminated first in all of this. So the Dow Jones is like bullish and the Russell is bearish, really, you know. So 2 completely different markets going on here. So with the Dow Jones here at the moment, we can look from the low here. Don't worry about the wave 2 here. On the bearish side, we can look at A and a B and 1, 2, 3, 4, 5 up here for wave C of 2. Now, if this moves up through here, then it takes its top out here, then we can eliminate wave 2 here. And then we're going into the bullish count. And if we were in the bullish count, we'd be looking for 1, 2, 3. We're in 4 now. Look, it's pretty sideways and ugly, isn't it? I mean, wave 2s are normally simple and sharp, and wave 4s are sideways and complex. So it looks like a wave 4, you know. But if that was a wave 4, then we would come up for a wave 5 here, about the same length as wave 1, because the extension's in wave 3. So then we would have a you know, some sort of ABC correction here. Because we get 5 waves here, right, that means it would be bullish. So that means it would have an ABC pattern here, and then would go up again from that point, you know. And we can put this wave 2 over here for that. But we don't have that extra high in here yet. But if that happens, then we know where we are in the bigger picture for this market. So there's some good things to come. You know, we knew that while earnings and wave 4s came into the same play. So that was kind of interesting, and it really sort of set them both in stone at this point. Is that the low here? Well, no, this wave 4 here can come back to the wave 4 of 1 lesser degree, and which is also the 38.2% retracement level. Can it be up here at the 23.6 the next fib? Yeah, of course it can. You know, so I don't know. Like I said, these are really messy here. Can it come lower? Sure. Can it push up? Yes, of course it can. I don't have any evidence of either of them at the moment for this, and I don't want to put anybody long. I said this week we don't really want to be looking for trades this week. We want this correction to mature. You know, there are there are stocks that are pushing higher, that have closed in the positive. There's some that are down 1%, some that are up 1%. There's a mixed bag of things, and this correction can be finished here. You know, I mean, if we look at Apple, for example, Apple's got a bit more of a bullish count going on with it, but up here we've been working through the A wave, the B wave, 1, 2, forget about the spike coming down, 1, 2, 3, 4, 5 for 3, 4 and 5 here. So that's possible here that we've got the A, the B and the C, because it's going to be like Apple and Amazon and the big ones that are going to come out of their corrections sooner. So we started to talk about 5 waves over here as an impulse wave here, which we look like we're getting here. So we could have this low in. There are markets that do need another low over here. So we're not out of the forest yet with all of this, but some of these are looking quite good. You know, it's sitting getting support on 165. It's part of group 2, minor group 2. These are, anyway, I won't go into all of that, but so there are these sorts of stocks will lead, can lead us to the upside, but we still need a very clear impulse wave here, and it does look like we're getting it. So but this is not all stocks. We've got stocks that like Tesla here, for example, that got a B wave up here, got 1, 2 here, 1, 2 here. I think we were in here yesterday. We're looking for wave 4. We got that. We're looking for wave 5. Now we need 4. So we still need to be down at 150. So we still need to come down here. So there's, that's the mixed bag of that we're up against here. So I know with wave 4s, they could be tricky as hell. So we just need to be, if you're going to take a trade in a wave 4, you make sure that it's, a very, a part trade, a third or something, a quarter or something, that you can handle a move back against it, without leverage. It's going to be clipping your ticket on time, on cost, any percentage fee is going to, even if it sounds small, it always works out to be a lot. So that's the lot. That's all of it, really. So a bit like sort of yesterday and before, I don't really have any answers for anything. It's just a bit of a wait and see, and we didn't want to put out any trades this week. We just wanted to allow the earnings to come out, let the dust settle. We'll pick things up. It looks like some of the stocks will have good earnings and push it up. How far will it move up? I don't know, but a push up and then another correction here. This top here, for instance, that will be the wave 5 on the SP500 probably as well, But in this case, getting 5 waves up here off the low here, I don't think we can look at that as wave 4. I mean, let's just go back to this here. What happens if we get 5 waves up here? Yeah, it can fade at that point. That's the thing. So we need to go past that. Anyway, we're getting there. We're getting there. At least we know whether we don't have all the answers, but we have a good handful of them. We know at what points we know at what points things are going to be that we need to be careful about things. It's like coming back to the S&P here, for example. Once this wave 4's finished here, then we know that we can just have, go back here, go back up here to the 50K, just shooting the breeze here a little bit. We've got 3 waves up here. Yeah, we know that it can fail from here and come on down. We know that, but we'll still stay with the wave 4 here. But once we get these 5 waves up here, we know that that's the weak spot, We have to move past that to understand if we're in a bullish picture, but at least we know that. It's not like we don't know what's going on. Do you know what I mean? We don't have the answers, but we will. At least we've got something we can get our teeth into. We're not sort of a fundamental trader wondering if there's going to be a bear market or not. I mean, I don't know either, but we'll know soon enough anyway. So at least we've got a bit of reality to grab hold of. That's what I like about Elliott. Alrighty, I'll leave it all at that. Thanks for tuning in. Cheers.